Volatility looks active, but distance is still being recycled between session boxes. The 20 Bollinger Bands are flat. The 4 Bollinger Bands are re-expanding. That combination keeps movement visible, but it does not automatically open clean structural space. The chart is still being negotiated through inherited session boundaries. That is the first condition to notice. Price is moving, but location is being repeated. The March 10th U.S. session anchor formed in a very specific place. It did not begin in open space. It formed between the lower boundary of the March 5th Asia session box and the 20 moving average. That matters because the session began from inherited structure rather than from fresh displacement. At first, the move looked constructive. It pushed above the upper boundary of the March 5th Asia box. That made the chart appear more open than it really was. But the next interaction immediately exposed the limitation. The push reached the lower boundary of the March 5th U.S. session box near the upper 20 Bollinger Band. That is where continuation failed. Not once. Quickly. So the important change was not the attempted extension itself. The important change was where the attempt stopped. It stopped at an older boundary while the broader 20 Bollinger structure remained horizontally aligned. That means the chart still treated old space as active space. Once that failure formed, the return was not shallow. Price was pressed back toward the lower boundary of the March 10th U.S. session box. This is where the execution environment changed. When price can travel from one inherited upper test back to its own lower boundary, distance expectation expands in both directions, but tolerance narrows. That is a very specific kind of trading pressure. The chart looks energetic, yet the margin for error contracts. Why does it contract? Because continuation no longer has room to drift slowly. It must persist faster. If it does not, the chart reverts into the box it just came from. That is exactly what happened here. This is where between-session trading becomes more concrete. The relevant idea is not price moved a lot. The relevant idea is that price moved from one known box edge into another known box edge and failed there. That failure immediately redefined the usable corridor. So the corridor was no longer open above the March 5th Asia upper boundary. It became trapped between the failed test near the March 5th U.S. lower boundary and the lower boundary of the March 10th U.S. box. That is not an abstract condition. It is a repeated path with visible limits. Inside that kind of path, behavioral friction rises. Continuation stalls faster. Pullbacks travel deeper. Reaction speed matters more. Waiting becomes harder because the chart keeps revisiting levels it just touched. The flat 20 Bollinger Bands reinforce that reading. Flat bands do not remove movement. They remove directional permission. They keep movement local. They keep distance negotiable. The red 4 Bollinger Bands, however, began re-expanding after contraction. That is why the chart feels faster. Shorter volatility cycles are widening again. But they are widening inside a broader horizontal environment. That creates visible activity without clean relocation. So the first structural takeaway is simple. The March 10th U.S. session did not create free space. It exposed a box-to-box trading corridor. And once continuation failed near the older March 5th U.S. lower boundary, the chart began processing inside a narrower tolerance regime than the candles first suggested. Activity remained visible, but the chart kept redistributing distance inside nearby boundaries. That becomes clearer in the March 10th Asia session. This session did not form in isolation. It formed between the lower boundary of the March 10th U.S. box and the upper boundary of the March 9th U.S. box. So once again, price was being handed from one inherited level to another. This matters because repeated box formation near prior boundaries changes how distance behaves. It stops acting like open extension. It starts acting like negotiated transfer. The chart does not hold one side cleanly. It keeps rotating between mapped points. After the March 10th Asia box formed, price moved between that Asia box and the midpoint of the March 10th U.S. box. That midpoint matters. Midpoints often look passive. But in a compressed environment, they become active friction zones. Why? Because when the top and bottom boundaries are already close, internal levels begin absorbing movement earlier. Distance does not need to reach the far edge to lose efficiency. It can stall in the middle. That is exactly the kind of detail that makes between-session trading more concrete. The move then dropped toward the upper boundary of the March 9th Asia session box. Notice the sequence, not random. Boundary to midpoint, then midpoint to older upper boundary. That sequence tells you the chart was still respecting inherited structure across multiple sessions. It was not processing one box and moving on. It was recycling prior memory. That recycling increases failure frequency. When failure frequency rises, the behavioral consequences are immediate. Pullbacks deepen before stabilizing. Narrow tolerance gets exposed. Continuation attempts lose efficiency faster. And holding pressure increases because the chart does not stay comfortably away from the level it just left. This is the kind of environment where distance can look available on the candle body, but usable distance keeps shrinking in practice. That difference is important. Visible movement is not the same as durable spacing. Here, movement remained active while spacing kept compressing back into old boundaries. The 20 Bollinger Bands support that reading again. Both upper and lower bands are moving horizontally. That keeps the wider volatility envelope neutral. It prevents the chart from giving one side durable external space. So every push has to prove itself quickly. The 4 Bollinger Bands, on the other hand, contracted first and then expanded again. This creates a familiar trap in perception. Expansion returns, so the chart feels ready to travel. But if that re-expansion happens while the wider 20-band structure stays flat, smaller cycle energy is often forced to negotiate inside older levels. That is why the chart keeps feeling fast without becoming clean. Fast does not mean free. Fast can still be crowded. And crowded movement produces its own execution burden. Inside crowded movement, the reaction speed requirement rises. You do not get much passive tolerance. Price can rotate from the March 10th Asia box into the midpoint of the March 10th US box, then press down into the March 9th Asia upper boundary with very little structural transition in between. That compresses decision time. So the second structural takeaway is this. The chart kept converting session boundaries into internal trading lanes. The March 10th Asia session did not open a fresh zone. It intensified interaction between already active zones. And once price returned toward the March 9th Asia upper boundary, the market confirmed that it was still trading between repeated boxes rather than escaping them. If that condition persists, distance remains conditional rather than durable. If it loosens, the same boundaries stop behaving like transfer points and start behaving like abandoned space. For now, they are still active. The next transition made that repeated structure even more visible. The March 11th U.S. session began exactly from the upper boundary of the March 9th U.S. session box. That starting point is precise, not approximate. It tells you the chart was still using older U.S. memory as an active launch boundary. From there, the March 11th U.S. session extended toward the midpoint of the March 5th Asia box. That creates another inherited interaction. A newer session began from one older box edge and traveled into the interior of another older box. This is what makes the environment feel tradable between sessions instead of only during them. But again, the important question is not whether price moved. It did. The real question is whether that move escaped the recycled map. It did not. After reaching toward the midpoint of the March 5th Asia box, price continued testing the upper boundary of the March 5th Asia anchor while remaining inside the March 11th U.S. session box. That means the older March 5th Asia structure was still heavy enough to shape current behavior. Older memory was not background. It was active. Then the March 11th Asia session formed between the upper boundary and midpoint of the March 11th U.S. box. That is another compression signal. The new Asia anchor did not appear below fresh displacement or above newly accepted space. It formed inside the upper half of the prior U.S. box. That immediately narrowed tolerance. Once price moved below the March 11th Asia box, the chart pressed down to the lower boundary of the March 11th U.S. session box. After that, it began trying to re-engage the lower boundary of the March 11th Asia box from below. So the latest sequence is clear. Upper half Asia formation, internal failure, lower U.S. boundary test, then attempted re-engagement. This is where between-session execution conditions become very specific. When a newer Asia box forms inside the upper portion of a prior U.S. box, then loses that internal position, the chart often shifts from smooth rotation to sharper reaction dependence. Distance becomes less forgiving. Retracement depth increases. Tolerance width contracts. The 20 moving average sits in the middle of this environment as a local balancing line rather than a directional driver. Price keeps crossing near it. That reduces its ability to provide clean external separation. The 20 moving average is present, but it is not releasing the chart from repeated boundary interaction. The 20 Bollinger Bands remain flat. That is still the larger condition. Flat upper and lower bands keep the broader hourly environment laterally organized. So even when shorter cycle expansion appears, it must negotiate a horizontal envelope. The 4 Bollinger Bands are doing the opposite. They contracted first. Now they are expanding again. That expansion increases visible responsiveness. Candle-to-candle movement becomes more urgent. But urgency inside flat higher width bands often increases behavioral friction rather than reducing it. That is why the chart keeps producing touches, rejections, retests, and short-lived relocation attempts around old session boundaries. The environment is active, but it is still crowded. And crowded structure changes how session-to-session movement must be interpreted. If price can hold above the lower boundary of the March 11th Asia box after this re-engagement attempt, the upper half of the March 11th US box remains structurally usable. If re-engagement keeps failing there, movement remains vulnerable to being recycled back toward the March 11th US lower boundary and then into older neighboring memory again. So the final structural takeaway is not about direction. It is about map persistence. March 5th, March 9th, March 10th, and March 11th are still interacting through inherited box edges, midpoints, and failed upper tests. The market is not simply moving from session to session. It is still trading box to box while execution conditions remain in transition.